Hello there, my beautiful friends, and welcome back to another episode of TA with MK. You guessed it, my name is MK. In today's episode, as we try to go for 2 videos in a row after taking a month off, we're going to kind of follow up on some of the ideas we talked about yesterday. In yesterday's video, we spoke about the DXY, the S&P 500, and a little bit about Bitcoin. Today, we're not going to worry about the DXY, just a quick update, but not necessarily dive into it. But we are going to zoom in a little bit more on the S&P 500, specifically the E-mini futures, just to kind of give you guys kind of a short-term outlook on what could be potentially setting up for the remainder of this week. And then also Bitcoin, and I'm also going to talk about one of the coins that I'm tracking, potentially looking to trade. In fact, I've already opened up a trade, so I'll share that with you, but I'll explain kind of my targets and my invalidations and so forth. Now, if that sounds interesting to you, please remember to like and subscribe. Let's go. It's TA with MK. It's TA with MK. Okie dokie, so the first thing we need to talk about really quickly is the DXY. This is the US dollar index. For those of you that are new to this particular chart, all it is a chart that represents the strength of the US dollar versus a basket of all of the, not all of the, but a bunch of the other major currencies in the world, things like the yen, the euro, the pound, right? And generally speaking, when this is going up, it's generally bad for, stocks, especially risk-on assets, and when it's going down, it's generally good. Now, this is not necessarily something that is true on lower time frames, but on these higher time frames, it's very much true. And in yesterday's video, we spoke about the idea that it was inside of this green zone, or this green box of current support, until proven otherwise. And we spoke about the idea that plan A would be a major bounce at this area. I don't think I used the word major yesterday. I just said we might see a bounce, or at least a short-term bounce. That was plan A. And then we talked about the idea that, hey, if this were to lose this support and, turn it to resistance, that would be plan B. Plan A being, bad in the short term, at least for stocks and crypto and Bitcoin. Plan B being good. As of right now, it's still sitting on the lower end of this support level. However, it looks like it wants to break down. To be honest with you, that's just what I'm kind of leaning towards, especially if we clear the chart up real quick. This is already longer than I meant to spend on this, but if we kind of just draw this falling wedge, well, I already have it drawn. You could kind of, now if this was a traditional chart, you would look at this as a bear trap because you had resistance, the underside was support. So this is definitely a valid falling wedge. Now, granted, this is not a traditional stock. You don't have people trading the DXY per se, but on a traditional chart, if you see a break to the upside, which is statistically what this is supposed to do, but it's not able to hold, then you expect the chart to go the opposite direction, which it already has started to, but you would expect kind of a visit of this lower trend line, right? Somewhere down here potentially, which would be this, area back here, which was resistance, support. You could kind of call this the next zone. And if we get that downside move, I'm not saying that we've got it yet or that we can 100% say we're going to get it, but should we get this, we might, we could expect to see the DXY visit as low as 100. And over time, maybe even lower as the year goes on. Now, until this support is lost, we can't assume that's going to happen, but if it's going to range a bit, we may see some more short-term upside of stocks and crypto. So we'll talk about that here in a second on the S&P 500, but just keep in mind that until this level of about 104.5, 104.50 is regained on the DXY, we have more upside potential, at least in the short term, than downside. Now, if this regains that level, at that point, you could expect a run clear back up here somewhere to this area that was previously support up around 108. And, you don't want any part of stocks if that happens. But at least in the short term, when I say short term, I mean the next few weeks to month and a half, there is, some room for some upside out of stocks. And that brings us to the daily chart for the ES1 explanation point, which is the S&P 500 E-mini futures. Similar chart to the one we looked at yesterday. The SPX, which is just the traditional chart for the S&P 500. The only difference is that the E-mini futures trades 24/7. So after hours, which right now it's little after 10 p.m. Mountain Time where I'm at, you know, this is still trading, so it can give you a little bit of an edge. Now, one thing I wanted to point out again, which I pointed out in yesterday's video, as it related to my Plan A and Plan B, was that yes, I talked about a short-term move potentially to the upside, but that my bias, just because this is what the charts was telling me, for the midterm at least, was still to the downside. The reason being is you have this major trend line that dates clear back to the end of December of 2021, where we got rejected. I mean, we've been rejected at the same trend line 5 different times, and most recently this yellow 200 moving average, which is just kind of an important moving average as it relates to trend on, you know, the daily. Really any time frame, but specific, you know, in this case, the daily being kind of a more macro trend. It was resistance here, it was resistance, you know, here. It got above it briefly, but lost it. Again, above it briefly, but lost it. Double top, a little bit of a downside move. And if you zoom in right now, which is something that I posted in my Telegram group last night, that gave me the idea that we could see a short-term upside move. You had this symmetrical triangle here that broke to the upside, and the measured move for that is just yet another bearish retest of this same gosh darn trend line that has been resistance, right? So in the short term, could we see a little more upside move out of Bitcoin, which we'll talk about here in just a minute? Yes, and I'll give you guys some targets and some, you know, invalidations, ideas, and so forth. But to see some sort of sustained move, something that would lead me to start opening up midterm holds, we need to see a break back above these moving averages, something where we flip basically 4,000. That could be the number you look at here, you know, as more of just a specific number here on the S&P 500. We need to flip 4,000 at this point as support and start trending back up here. Now we have other areas we'll talk about should that happen that are, you know, maybe even more important as far as being a midterm type of thing, especially this whole red zone that was, you know, been interacted with on so many occasions. But just in the short term, we need to flip 4,000 and then ultimately, you know, something like 4,150, just for me to believe that we have any, you know, sort of the bear market could potentially be over, and now we're changing trend from this long downtrend to kind of like an uptrend, right? Otherwise, anything that we see in the short term to me is just that, a short-term move. Take profits quickly, and we'll start looking for some more downside ideas, right? Now, as we transition over to the Bitcoin 4-hour chart, we're just going to try to keep things kind of simple here with the TA. This is going to be the most basic TA, because a lot of times your most basic TA is the way to go, right? What we basically have had ever since we broke down, had this really big drop back in November of last year, 2022, right? This was the end of the year, essentially, right? We had this big drop where price action was clear up here in this previous range at, you know, 20,000, and then we plummeted down. We put in our ultimately ended up being our low, or at least our most recent low. Depends on your exchange, but we'll just call it 15,500. But you basically had this low, this high. This is a little bit of a lower low. It could be considered a double bottom depending on what time frame you're on, but we had a low, and then we were able to put in this high, which, you know, at least in the short term is a higher high than this high. Now we're working on another potential double bottom, bottom 1, bottom 2. Now the measured move for this is all just short term, right? This is kind of the short term move we're looking for before we, you know, before decision time on the S&P 500 and everything, right? S&P 500 could go up a little bit in the short term we just talked about. If Bitcoin follows that, you know, we're looking at a move somewhere between 17,800 and I would say the underside of this more important zone, which has been resistance, and our most recent high, basically around 18,000. Because in my eyes, and I told my Telegram group this last night, that until we flip 18K as support with, you know, volume follow through, like we see some big spikes in volume down here, big dildos, as everybody likes to call them, big green dildos, until we see something where it breaks back above 18K with a lot of volume, you know, retests it, preferably flips it as support and starts trending this way, and ultimately puts in another higher high than that high, then again, just like we talked about in the S&P 500, this, you know, I would only view this as a short-term rally. Now, when we move over to the coin that I was, you know, referenced in the beginning of the video that I was going to quickly speak about, the reason why my targets are so low, or will be low, is because, again, this is kind of what I look at as the most likely short-term possibility. And then at that point, you know, lock in profits and wait and see, can Bitcoin flip 18K? It doesn't mean it can't. I'm not saying it can't. Just statistically speaking, until it does, you know, this has to be viewed as maybe just a short-term rally. Biggest thing is if it can and puts in another higher high, you can start to see this is turning into a giant, you know, rising channel potentially, which is a bearish pattern, but, you know, at least in the short term, we could see moves clear up to, you know, $19,000 as it, you know, moves through this. So we'll take it one step at a time, but I just want to let you know that plan A in this case, which is to the upside, would be a move, you know, right now as we retest this blue or this purple area on my chart as support, as long as we can hold 17K, you know, between now and maybe like midday tomorrow, I would honestly expect to move back up to 17,800, possibly as high as, you know, 18,000. At that point, you know, do we flip it as support, you know, or, you know, and move higher? You know, time will tell. Ultimately, that's where I would take profits, and if we do get rejected, then I would at least expect to move back down here again to retest 17,000. So we'll follow up with this idea tomorrow. Invalidations in the short term, if we lose this area, so this is a rising channel, if we come back down here and lose 17,000 and retest it bearishly, at that point you would have a measured move to the downside, something we'll follow up on tomorrow's video. It wouldn't be a very big move, but it would be something, you know, back down here to like the 16,005 to 16,600 range. So those are the areas we'll keep an eye on. And finally, to finish out, we're on the Link daily chart. This is CHAINLINK. Now, ironically, this was the coin that I spoke about in my very last video that I made about 5 weeks ago before I took my long hiatus. And at the time, you know, I'd mentioned that one thing that was nice about Link was that it's very much traded inside of this large range dating back to May of last year. Ever since it broke down from higher prices over 10 bucks, it came down, it found support right here at about, you know, 550. Then it kind of established this little bit of a middle range that was being rejected, tested the top side of this blue box, you know, then it found a range high up here at about 930 to 950. Bottom side, mid-range, bottom side, mid-range, right, top range. You can kind of see that it's just really, it's trended inside of this large range for, you know, ever since May of last year. Well, when at the time of making this video at the end of November, we were right at the mid-range, and I was giving targets that if we could flip that on the daily as support, you know, my criteria has always been one candle with volume to show the breakout, and then another candle body close above, and then that's when you know, to retest, and that's when you enter. We had targets up here between, you know, basically just under 9 bucks and as high as 950, because that was the range high, right? Now, unfortunately, the upside move was just not what ended up playing out, but the nice thing was, if you wanted to short this coin, I didn't. This is when I took a little bit of a break from the market, but, you know, it once again respected the same old range. I did pass the idea along to our Telegram group that this was starting to look on lower time frames like a rounded top, where basically we had this top and then it just kind of started to mirror what it did on this side. Kind of had these little moves up like this, and then it repeated them down like this, and again back to the bottom side of the range with a little bit of a wick lower. Some people look at this as a bear trap. Really, it's the same area. It's wicked back down here on multiple occasions, back down to about 535 to again 550. So what we're looking for now, if Bitcoin is to, you know, revisit 17,800, possibly 18K, is a break of this area that it's at right now at about 610. Flip that as support, and then you have targets back up here at this moving average, which is about $7, so just under $7, and the upper end at about 750. Now you could take off the majority of your profits right here at about 650 to 660. You can see this is kind of an area that's been interacted with on multiple occasions. So if you enter this as 610, you know, the first place I'd put a stop loss would be about 580, just under 580, something like 578. You'd be looking for, as soon as it hit this area at about 650, move your stop loss to break even, and maybe take half your profits. And then, you know, the other two targets you could take 25% and 25% at would be just under $7 and just under 750. That'd be your upside ideas. Of course, if we get rejected here or Bitcoin loses 17K, you could short Link if you wanted to back down to this range low. Anywhere between about 530 and 550. Now again, I'll post a image on the screen, just the trade that I've opened up, also with just kind of what my targets are and my stop loss, as well as my invalidation area, just so you guys kind of know how I'm managing this trade. And tomorrow I'll put out another video kind of updating you guys. I'll also update you on Twitter. I might even put out a short video. I'm trying to get back in the swing of putting out as many videos as I can after that long hiatus, so I'll keep you guys posted on this trade, but just wanted to kind of give you guys some short-term ideas of what I'm looking out for. As always, you can also check the link in the description for my Telegram group, which is where I usually update guys on what I'm trading, what my targets are, and so forth. I appreciate each and every one of you that made it this far into the video, and as always, on your way out, if you can do me a favor, please remember to like and subscribe, and we'll catch you in tomorrow's video. It's T-A-With